adapting to the changing climate.
The largest oil and gas producers and the largest carbon emitters are state-controlled enterprises.
Their leadership has the sway to push global institutions into action.
BlackRock's relationship with the Fed is a really useful thing for the public to know about. The central bank can do things to make our lives better, and it can do stuff to make some people really rich.
Here's how BlackRock shot to the top of the financial industry. The company we know today as BlackRock was formed in the late 1980s. A young Larry Fink launched a firm under the Blackstone Investment Group with 7 co-founders. Fink's team came together under the management of Steve Schwarzman.
We started the business together in around 1988, 89, and they wanted to sell it 4 or 5 years later.
After the sale, BlackRock spent years developing a risk management software that they call Aladdin. Aladdin uses a Monte Carlo-styled algorithm to uncover scenarios in which an investment could fail.
Over the last really 20 years, financial markets have become much more complex. Volumes have increased exponentially. At the same time, we've had an explosion in computing power. Chips have become so much more powerful and expensive. The combination of financial markets needing increased technology and there being cheap, inexpensive ways to really scale up technological innovations has led to sort of the confluence of things like cryptocurrencies, robo-advisors, and even more basic things, simply like equity markets being almost completely electronic now.
BlackRock's tech-driven approach made it a major firm. Over time, their managed assets swelled, and the company started to buy out its competitors. In 2006, the firm acquired the distressed assets of Merrill Lynch, and in 2009, it took over Barclays Global Investors. At the time, BGI owned the intellectual property rights of iShares. Today, that brand is one of the most heavily traded names in the stock market. About 3 million shares of its fund tracking the S&P 500 are exchanged every day. ETFs, or exchange-traded funds, are at the heart of BlackRock's empire. These funds have taken over investing in the past decade.
I think we can attest that growth to the attraction of ETFs as pooled investment vehicles that allow investors to diversify their portfolio. And diversification has been shown to be one of the key factors for investors to have a successful investment program.
You can think of ETFs as baskets of stocks based on themes. For example, BlackRock offers funds tied to corporations and small towns. They also issue funds that track oil and gas exploration and the defense industry. ETFs give investors a wide range of holdings at a low cost.
And just to give a sense of how low those costs can go, let's take, for example, BlackRock's S&P 500 exchange-traded fund. BlackRock is charging investors 30 cents a year on every $1,000 invested. And there's great competition among fund providers for low fees, and that's been a great thing for investors.
Just 3 companies dominate the ETF market.
BlackRock is by far the largest, with roughly a 35% market share of domestic market. The next 2 are Vanguard and State Street, both somewhere in, say, the 15 to 20% market share range.
ETFs reshaped financial markets in a short amount of time. More than 80% of all assets invested over the past decade have gone to one of the big 3, according to legal scholars writing in the National Bureau of Economic Research. Experts say the financial and technology industries lend themselves to concentration.
Competing S&P 500 index funds, they're all holding essentially the same portfolio, and so they're all going to earn essentially the same return before costs. So from the investor's perspective, the best thing to do is to buy the one that passes through the least amount of expense to you. And because of economies of scale, that's generally going to be the largest fund.
BlackRock's popularity grew alongside the explosion of interest in passive investing. In addition to individual wealth, BlackRock manages sovereign wealth funds and has a burgeoning private equities division. The company is also a lender to emerging markets in Asia and elsewhere. 78% of the firm's revenue is derived from investment advisory fees collected from products like ETFs, which is why you might have read articles about BlackRock or seen their leadership on TV.
So this letter